네, 안녕하세요.
Good afternoon, ladies and gentlemen. Welcome you all to this important event. I am Lee Misa, today's MC. Good to see you all. Now we'll kick off the first main session of the afternoon session, main session 2, under the theme of what opportunities are Asian VCs looking for in the crisis. So I'd like to have a short housekeeping announcement. And our conference is going on and offline, so our Korean English versions of the streaming are available, and official website will allow you to find out the materials and slide text, and you can take part in the Q&A via chat box function. And we are providing simultaneous interpretation services. So if you need this service, please find the receiver on your table, channel 1 for Korean and 2 for English. Without a further ado, we'll kick off the session 2 in the crisis. What opportunities are Asian VCs looking for? And I would like to introduce to you the moderator of CEO Junhyuk Bae from Korea Value Investment. So please, and all the panelists, please come up to the stage. Please give them a big round of applause.
Please come up to the stage and take a seat, please. 네, 무대 위로 올라오셔서
Please come up to the stage and take your seats. All the panelists and moderator, please take your seats. Thank you.
네, 감사합니다.
Thank you for your cooperation, and I'd like to hand over my microphone to moderator CEO Bae. Good afternoon, ladies and gentlemen.
Now we have get together here. I will introduce our panelists to you. Michael Lints, he is from Golden Gate Ventures, his partner in charge of Vietnam, Malaysia, and Dojuan, South Asia. Hi, Michael. Say anything? So say hello.
Hi guys, I'm Michael, based out of Singapore, and I'm a partner at Golden Gate Ventures. Pleasure to be here.
Yeah, thank you, Michael. And Mr. Shuai, we can call him Sean. He's a executive director of ClCC Capital. Please, Sean, say hello.
Hello, everybody. I'm Sean. I from China and based in Beijing. Our platform is ClCC Capital, is the subsidiary of the most leader investment banking of ClCC. And currently, we also have set up a Sino-Korea cooperation platform called the ClCC Ascent. And I'm right now in charge of this platform. Thank you.
Thank you, Sean. And Mr. Lee Jun-hee, he is vice chairman of Korea Venture Capital Association. Mr. Lee.
Good afternoon, ladies and gentlemen. As introduced, I am Jun-hee Lee, Vice Chairman from Korea Venture Capital Association. Nice to see you all.
And finally, Mr. Raouti Chehih, he is the CEO of Tencent. Please.
Yes, good afternoon, everyone. Thank you for welcoming me. I'm Raouti from France, based in Dubai, and I'm working in early stages companies, and especially in investment.
Thank you. From now on, Mr. Michael Lynch will give us a really important statement. Please, Michael.
Well, thanks again, everyone, and very good to be here. I think it's my fourth trip to Korea this year, but never been to Busan. So this is my first time here. It's a true pleasure. What I want to do for the next, I'd say, 20 to 25 minutes is kind of talk about what VCs are looking for in this current environment, and then we'll continue with a panel discussion. As everyone knows at the moment, it is a very, very difficult environment. The macroeconomic signs don't look good from where we are right now. So I want to talk through, as investors, what do we tend to look for? What do we talk to with our founders? What are sort of the big signs and the big trends that we foresee for next year? But what I'll do first, I'll do a brief introduction about ourselves and our firm. As I mentioned, I am Michael. I'm based out of Singapore. I've been in Singapore for the past 10 years. I'm a partner at Golden Gate Ventures. Golden Gate is an early stage VC firm that was founded about 11 years ago. Our focus is Southeast Asian early stage startups. So we invest in markets such as Singapore, Indonesia, Malaysia, Vietnam, Philippines, and Thailand. But we've also made investments here in Korea. Companies such as Kelta Labs and My Music Taste are also part of our portfolio. What is interesting about Southeast Asia is that about 10, 11 years ago, there wasn't really an ecosystem. There weren't that many investors. There were a few, I would say, angel investors, some private equity funds, and some VC funds that were mainly backed by the Singapore government. But as of recent, that ecosystem has really grown really fast. And I'll talk a little bit about the ecosystem, but also how we navigate through the current difficult environment. On our firm itself, we're currently at fund number 4, which is a $120 million fund that invests in seed and Series A across Southeast Asia. We're industry agnostic, so we invest in different industries ranging from logistics, agri-tech, health tech, and e-commerce. We have 3 offices. Our headquarters are based in Singapore. We have an office in Jakarta, and we have an office in Ho Chi Minh City as well, Vietnam. But maybe some key observations, and more importantly, what is the world that we're in right now? I'll give a quick anecdote. In 2021, we had a record year of venture capital investments across the globe. And to give an example for Southeast Asia, we had over $21 billion of invested capital across early and mid-stage startups. That was an amount that we've never seen before in the region. We had large investors such as Tiger Global, KKR, Warburg Pincus, Sequoia, all investing in the region. But earlier this year, specifically in January and February, I was talking to a lot of the private banks, and they were all very concerned. Their biggest concern was there were a few IPOs coming up, and they didn't think that those IPOs would actually hit the price that they had in mind. And then Russia-Ukraine happened, and then interest rates went up. And you saw more and more that VC funding slowed down. It started in Q2 of this year, and it was worse in Q3 of this year as well. More and more VCs said, hey, I really want to understand what's going to happen in the next year, so I'm going to slow down my pace of investments. But not only VCs. We saw limited partners, people that invest in our funds, slowing down as well. And as a consequence, it was harder and harder for startup founders to fundraise. And as it became harder and harder, the entire ecosystem cooled off. Now, it's very unclear what's going to happen next year. But I do have a few pointers in terms of advice of where things are going to go. I was speaking to the New York Stock Exchange a few weeks ago, and they told me that this has been their slowest year in a decade. Only a handful of IPOs. And the ones that did go IPO, the pricing wasn't that good. So everyone is concerned. If you are a startup founder and you didn't raise your round of funding last year, what's going to happen this year? Are you going to cut costs? Will you be able to fundraise? So there's a lot of concern for startup founders. But there's another key observation that we've seen. As venture grew last year, more and more larger funds were investing all over the globe, from Korea to Europe to the US to India, and also in Southeast Asia. With regulation in China technology sector cracking down, more investors were looking at alternative ways to still invest in technology but go into other markets. So Southeast Asia saw this influx of really big funds investing in companies, in some cases at a very high valuation as well. What we also saw was that a lot of companies that were raising on growth and not so much raising on profitability or on revenue multiples. When earlier this year, these companies came back to the market to fundraise again, a lot of VCs said, hey, hold on, you raised on this huge multiple on your revenue or based on your market growth. With the current concerns, I actually want to focus more and more on your sustainable metrics. Do we see profitability into your company in the next few years? So for some investors and for some founders, the discipline that they had earlier on in maybe 2018 or 2019 went out the door. There was so much capital available that we've seen companies raising a Series A round at over $100 million in valuation. But how are you going to raise your second round at twice the valuation if you can't hit your numbers? So a bit of the investment discipline was gone. And that was a big concern for us as investors. But we also noticed that not every single business model is venture backable. As venture investors, and my colleagues on the panel know better than I do, as venture investors, you need a big return. Your fund needs to return 5 or 10x. That means for every company we invest in, we need to return 50 to 100x on those investments. If you're a generic e-commerce company in Indonesia at the moment, it's going to be very hard to make those returns. So we are looking for, hey, what is going to be that next big cycle? And where do we see a lot of opportunity? And I'll talk a bit more about some of the trends that we're seeing as investors. The question is also, what do I do as an investor? Do I support my companies when I need help? Am I going to spend time with the companies that are having a hard time fundraising? I know for a fact that for the underperforming companies, me spending a lot of time as an investor takes away time of the good companies that might need my help as well. So there's a lot of debate as investors in where do I put my priorities when there is this big downturn. But there are a few things that you can do. I think you always need to go back to your business fundamentals. I think as a founder, but also as an investor, having business fundamentals is crucial because it's going to help you through the bull market, but it will also help you through a bear market. Raising a massive amount of capital is not always the right direction. Sometimes you need to raise just enough for your business and to make sure that you survive the next 12 to 18 months. And then your next fundraise is based on solid fundamentals. So we're seeing more and more founders now cutting costs. We're seeing more and more founders focusing on, I want to be profitable in the next few years. We're seeing more and more founders understanding that if you are raising a late stage round, those investors have a different priority and they have different ways of doing due diligence and valuing your company. We're also seeing that your standard business-to-consumer companies, high-growth, high-burn companies have come out of fashion. People are more and more focusing on solid business fundamentals. It is not just about growing, growing, and growing without having solid metrics underneath, without growing sustainable revenue, without building your team. When you go into a new market, we really want to understand what is your biggest differentiator. So the discussions that investors have with the portfolio companies and with their founders has changed over time. And these changes are coming fast because are we at the bottom of the market? Are we going to see more? We're very unsure. If you look at big seismic events like FTX recently, there's big concern that we haven't hit the bottom yet, that we are going to see more impact on the venture ecosystem. There were a number of companies in our market in Southeast Asia that are planning to IPO beginning of next year. And most of those IPOs have been postponed, some of them indefinitely. So the first few months of next year are still going to be fairly uncertain. This doesn't mean it's all bad. Luckily, there's some good news as well. We still feel there is plenty of opportunity in different market segments, and I'll talk a bit more about some sectors that are exciting for us as investors. But I think in terms of approach, your business fundamentals have never changed. The moment you start a business and you do it based on a business model that is sustainable, you do it based on sustainable growth, a solid team, an industry that needs disruption or that has growth in it. If you do it based on understanding your industry and knowing where growth comes from, working with strategic investors that add value to your business over time, I think those fundamentals never change. So there's still enough room to build a business. Just be very conscious and well thought about what you're building and who you're building it for. I wanted to show a snapshot of how fast things can evolve. When I moved to Singapore about 10 years ago, we had a handful of VC investors and a handful of angel investors and some government grants. If you look at this slide now, and this is not even the entire ecosystem, within 2 years, the number of VCs in Southeast Asia or in Singapore alone grew from 125 to 250. So it doubled within 2 years. So this massive amount of capital in the region also meant that founders were able to raise money fairly fast. And we're now seeing a correction happen. Some of these large investors have decided Southeast Asia is still a very interesting market, but I don't want to over-allocate my capital. So they're more cautious. We're still seeing these big brand names being very bullish on Southeast Asia. There's a lot of talent, there's a young demographic. But people are more cautious making those investments. If I invest in Indonesia, am I going to invest in another fintech company? Or do I want something different? Am I going to look for more something in agri-tech, which is more an infrastructure play? But you see that this venture ecosystem evolves really, really fast. But it also means that for you as a founder, you need to find the right partner and try and navigate through this venture ecosystem. Here's some other interesting stats. Every single time an investor invests in a company, they're looking for a moment to exit. What is our time to get our money back as investors? What is our time to return capital? For Southeast Asia, that is not easy. I know that Korea has a very, very active stock exchange, but Southeast Asia is a very different beast. It has different markets with different stock exchanges. And not every investor in the market is keen on technology. For instance, if you look at Singapore, Singapore has a Singapore Stock Exchange called SGX. A lot of the traditional investors and retail investors are focusing on real estate, traditional businesses, and they haven't really adopted technology yet. But if you look at Indonesia, they've had 3 large listings within 1 year. A company called GoTo listed, which is a ride-hailing company. A company called Bukalapak has listed, and recently a company called Blibli has listed as well. So Indonesia is very prime and open to stock exchange listings. And then funny enough, if you look at Thailand, Thailand has a very, very strong stock exchange. It actually has the most transactions in the region. But you wouldn't think Thailand as a market to list your company on. So even as a founder and as an investor, it is very difficult to navigate all of these different ecosystems within this one market called Southeast Asia. And especially now, when things are harder, you really have to focus on, do I raise another round? do I want to hold off my listing a little bit longer for me to get the right price? So navigating through all of these different markets, different stock exchanges, working with different investors is very important in our market. That being said, the governments in the region are very, very bullish on technology. Indonesia has different programs for fintech companies to sandbox. Singapore has shown to be a leader as a fintech hub and a business-to-business hub, but also working with deep tech companies, companies like Spectral and Space Tech. So there are very open arms when it comes to adopting technology. But how do you navigate that market? What I think is interesting in markets such as Korea, but also Southeast Asia, is that we're seeing what we call Entrepreneur 2.0. We're seeing this large influx of amazingly smart young people that have worked for companies like Google or Kakao or maybe Meta, and then decide, hey, you know what? I've worked in this tech company for the past 9 or 8 years. I want to build my own company. And we have noticed that these founders are just really sharp. They know how to fundraise. They know how to talk to investors. They're also very knowledgeable about how to build a team. And why is that? Because they've done this for 10 years under the wings of a bigger tech company. And that is very helpful when it comes to going through these tougher times, because if a founder talks to me and says, hey, Mike, I've been building companies under Gojek or Grab in Southeast Asia, and I've been leading a technology team, or I was the CTO of this big tech company, and I'm now branching out on my own, that gets me excited. So this new influx of kind of the second generation of entrepreneurs, this makes us very happy, because I think it is going to be the next unicorns that we see. Those unicorns are going to be different than the unicorns of 5-6 years ago. These founders are building a company in a very, very difficult environment. And you know what they're going to do? They are going to be focusing on building a sustainable business. They are going to focus on, how do I find and work with the right investors? They're very much understandable about, okay, maybe I don't get the highest valuation, but I'm getting the right valuation for my company at this point in time. And I'm really going to focus on business fundamentals while building my business. And you also don't want to be too dependent on going back to your VCs every 6 months or every 10 months. With a sustainable business, you would have a runway of at least a year. And these entrepreneurs really understand how the dynamic works. So we're very bullish on this next wave of entrepreneurs that are now ready to build a company. What else is interesting is that we're seeing people move back from the US and Europe and coming back to Southeast Asia. People have been to Stanford or worked at Facebook in Palo Alto and say, hey, you know what? I now want to build a company in my home country. And all that experience that they had from those mature markets are now valuable for Southeast Asia as well. Every few months within our team, we have a really fun session. We kind of look at the entire landscape of venture capital and want to understand, hey, what are the sectors that we are very, very keen on? And sometimes in those debates, it goes head to head, because I might like investing into NFTs or investing into biotech, while the partners want to focus more on logistic tech or agri-tech. So every few months, we do a landscape of what is going on in the market and what are some of the interesting sectors that we want to invest in. I've mentioned agriculture a few times. It is something that we're very bullish on. We really think that agriculture in markets like Indonesia and Vietnam is going to take off. How can you help farmers with technology? How can you build a better supply chain? How can you link retailers to farmers and cut out the middleman and create more yields for farmers? We see a lot of interesting developments within nutrition and wellness. I think during COVID, mental health was one of the topics that really was ripe for disruption as well. So it is consulting apps that help you kind of get through tougher periods. We've invested in a company that is focusing on IVF, helping couples that are looking to build a family. We're very bullish on what is happening within the digital space. Although digital assets have been very, very tough over the past few months, we still see a lot of application down the line in the longer future. Fintech for businesses is something that has really been picking up in the region as well. So we feel that there is enough to invest in. Just need to find your niche and need to find something that you really feel passionate about in terms of building, and you'll find the right investor to work with. Lastly, I want to talk about specifically Vietnam and why we are so bullish on expanding our business into Vietnam. As investors, we've been active in the Vietnamese market for the past 10 years. But as of recent, in June of this year, we've decided to open up an office and have a team on the ground in Ho Chi Minh City and in Hanoi as well. Vietnam is a very young and dynamic market with a very supportive government that have decided technology is going to be a big equalizer. It's going to help our young population build their own companies, create their own wealth, and generate new jobs in new industries. We've noticed in Vietnam that the founders are extremely smart, well-educated, and they build new stuff. We've looked at a smart battery company in Ho Chi Minh City about 2 years ago, before this was even picked up in markets like Europe and the US. We're seeing companies in the social commerce space, digital brokerage, that are really building for a next generation. I think what Vietnam has showcased with 100 million population, that you can build something for the Vietnamese ecosystem. I think the big question for Vietnam is going to be, how do we expand beyond Vietnam? You see that currently most Vietnamese entrepreneurs build for Vietnam. And although it's a very big market, we think there's an opportunity to go beyond Vietnam as well, where these companies can expand to markets like Malaysia or Thailand or even Indonesia, which has 2 big markets. But you notice that when you travel to Vietnam, it's very welcoming. The tech ecosystem is welcoming. There are a few amazing funds that are locally on the ground that are very helpful. It has amazing companies like VNG and VinFast that are at the latest stage. You'll find banks and corporates that are very, very supportive. And you've seen a large number of Korean conglomerates being very active on the ground as well. What I was able to showcase today in my presentation is that although these are very, very difficult times, we remain extremely bullish on investing in Southeast Asia and Korea, as we are active here as well. We would love to have a conversation with founders, other investors to do co-investments, see where we can be helpful. And if you are looking to expand in Southeast Asia, please feel free to welcome us, and I'm looking forward to our panel. Thank you.
Thank you, Michael. Michael gave us a lot of idea about fast-growing industry and potential market opportunities in Southeast Asia. And from now on, we may discuss the main topic. Well, in 21st century, last 2 decades, we have 2 crises. The first one is 2002 or 3. We faced collapse of bubble.com. We have a lot of serious problems at that time. And 2008, we have a subprime crisis. Now, a lot of people say this year is also the 3rd crisis. So let us clarify, what is the crisis for Asian startup? That's the first question. Let's clarify it. So who will talk about this one? The first one is very simple question. Mr. Lee, would you please?
Yeah, happy to start. I'll continue where I left off, I guess. I think what is currently very difficult for, in terms of the current crisis, is I think the combination of factors, where there is, of course, political issues within Europe. We're having rising interest rates, rising energy prices. We're seeing a heavy slowdown in the venture capital industry in terms of deploying capital. I think these combinations of factors are different than the crisis we saw in 2008 with GFC. I think navigating and understanding as a founder, for example, how are you going to fundraise? How am I going to find the right investors? Am I able to extend my runway? I think that is a difficult question to answer at the moment. We're seeing massive layoffs in the tech industry in the US. We're seeing it in Asia. We're seeing it in Europe. I think finding value as investors is going to be more difficult. I think raising capital is going to be more challenging in the coming months. And I think, the question is when and how do we get momentum back? When do we feel that sort of the macro is going to be better? When do we feel that the crisis is over and it's shifting towards opportunity? I think everyone is currently in a wait and see stance, and that makes it very, very difficult for founders and also for investors to navigate.
Great, thank you. Any other idea?
Okay, yeah,
Sean,
I'm gonna talk about this. Yeah, I think I'm pretty agree with Michael. I think this time the crisis is pretty much under a significant transition period from the last great cycle of the last decade. I'm gonna put this answer in the opposite way. Let's talk about what we enjoyed in the last decade. The most important growth drivers that we enjoyed in the last decade is actually we can talk about this from three layers. First of all, is the political wise. Actually, the last decade we have enjoyed a relatively harmonied global environment with a lot of countries, especially in Asia, has enjoyed the industry distribution. So, for example, China or Korea, we have enjoyed a lot of the globalization dividends. I think in the next decades, this actually will be in the opposite way. It's quite in the anti-globalization cycle. And secondly is from the economic perspective, and I think in the last few decades, the global-wise is actually can print a lot of money, and in a relatively easing environment. I think currently because of the inflation issues and problems, I think in the next stage it's going to be quite a balanced shrinking stage. So which means we will have less money, in the market. And at last is the technology perspective. I think in the last 1 or 2 decades, from the venture capital perspective, we enjoyed a lot of returns on the internet and artificial intelligence applications in different sectors and scenarios. And those application scenarios has the pattern with very steep growth and relatively large penetration potential. And I think at the current stage, most of the relatively easily sectors with easier patterns to be penetrated is almost fully covered or fully developed. So most of the low-hanging fruit, I think, is already done. So I think put these 3 layers together, we're in a quite significant transition cycle at current stage. And I think one of the problems is also that we actually don't know where we are heading and how long this transition period is gonna last. I think that those are the fundamental issues of the current stage crisis. Thank you.
Thank you. Actually, we may divide 2 sectors. One is for startup, another one is for VCs. So let's just talk about the VCs only. Raouti, do you have any idea? Mr. Lee? Anyone first? Yeah, Mr. Lee, please.
Yeah.
So in case of startups, the most difficult barriers are the fundraising, and the second would be marketing strategies, but as of now, fundraising creates a source of concerns and problems. And we are at the crisis. And with regards to business, and as previous speakers eloquently put it, when it comes to business perspective, the smartphones changed the way industries work, and the COVID-19 pandemic brought about fundamental changes in the way we produce and the way we consume and the way we live in a fundamental manner. So traditional industries are now on collapse, and smart remote medicine and the smart logistics are now becoming a beneficiary of contactless society. So the abrupt changes in business model creates a challenge at the same time opportunities for startups. Some startups disappear and some startups start their own businesses in pursuit of new opportunities, and the fundamental personnel will face with challenges at the same time opportunities. So how we can manage this talent is one of the great issue as well.
Thank you. Mr. Raouti?
According to me, I think a lot of things have been said already by my colleagues. But for me, there are three barriers that the companies will have to overcome. The first is access to market, and for me, it's the most important thing. The startups will have to come from growth model to profit models, which is important for investors, and especially how they are going to convince, their customers to adopt the technology and do it in a very short period because they have to stay alive. So it's going to be like a very tough game for the companies, especially for the startups, to focus on the market and to make sure that their customers will be, using their technologies. And it's one of the most tricky things for me, being sustainable on the market and become profitable companies. The second is access to capital and everything I've been saying before. I think there is still money on the market. There's a lot of money on the market, but most of the investors are keeping this money because they want to see what's going on and what's going to happen. So we can see this money as a dry powder that people now are keeping to make sure that this money will be available when the market will be coming back to a better momentum. And the third is everything related to talent, because in that period, it has been complicated for some companies to find and to recruit and to hire talents within the last 10 years. So now with this, you have been looking at the situations, many companies all over the world where a lot of, employees were laid off, in big plants because the capital was not here anymore. So this talent pool will be an issue in the coming years.
Thank you. We talk about the crisis in terms of Asian startup. So from now on, we may talk about the crisis in terms of ourselves, VCs. So what do you think of our crisis? Any idea?
Maybe a bit of a different approach. I'm guessing this is not for us since we are all kind of, I think, experienced and mature. But there are some VCs that have never gone through a crisis before. If you've raised your first fund, over the past 4 or 5 years, you've never gone through these macros before. And I think the biggest concern for VCs in that case is how I'm going to speak to my LPs, how I'm going to explain to my limited partners that I might have paid too much for a few deals last year, and how I'm going to navigate going through down rounds. I think what we're seeing now is that there's indeed a lot of dry powder in the market, fully agree, but there are be some significant write-offs in some VC portfolios. And I think with that, some of the limited partners are going to be fairly concerned about the down rounds in their portfolio, what it means for their NAV. So I think as the year comes to a close, the financial statements will be coming out early next year. That towards March, people really understand the depth of the crisis within their portfolio. That might bring kind of another shock. We've seen some massive write-offs in the crypto space. We've seen it in the US. in fintech in Europe. The question is, how does it impact the portfolios and the value of those portfolio companies? And will those limited partners that have invested in these funds, will they still be keen to reinvest when these managers come back? So I think the next quarter is going to be challenging for a number of VCs, and I think for limited partners who do still have a lot of capital available, they might be balanced and say, you know what, we've been working with a number of VCs that have been investing in very, very risky business models. It's been all on growth. We're going to take a little bit of a step back and want to focus a little bit more on some more experienced VCs that have gone through these crises before.
Thank you. Sean?
Actually, we're keep thinking the formula that affect the performance of ourselves, like a venture capitalist. And actually, the performance of the venture capital could be like explained by a formula. It equals to how much money you raised, like the fund size you have, and how many sectors or companies you covered, and the target rate or the return of the company you invested, or it could be the MOC. And also like how much the percentage of the company that you invested. Actually, we can, as we research on this formula or analysis on this formula, like each item on the formula are actually will encounter headwinds in the next stage. Like for the fundraising side, it's like a very hard environment for the LPs to raise funds. And for the investor, the sectors you can cover or company you coverage is actually you only have quite few opportunities that you can invest in. And from perspective of the potential return on those investment or on those sectors or companies, actually there will be less and less targets with significant returns in the future. So I think basically that's the problem for the venture capitalists at the current stage. So how we face these problems and solve these problems? What should be our reactions? I think from the investment side, how to elevate our coverage and the potential returns. I think we need to define quite accurate strategy, and also you need to be agile. You need to refine your strategy on a very frequent basis. And on the other side, for the investment evaluation, you need to also set up a prudent yet efficient way, to evaluate your investment targets. So I think efficiency is also quite important for us at current circumstances. And for the fundraising part, I think we need to have communications with our potential LPs more frequently, and with deep dialogues, so can get everybody on the same page. And also, I think for in order to maximize the potential return, I think we also need more flexible paths for the dual asset plans. Because the investment is only the start of our activities. So the exit and the realization of the return is also quite important. So I think the exit passes is also quite a key figure for us. Thank you.
Yes, currently the crisis facing Asian venture capitals, I think there are three major factors. The first one is that interest rates and investment are in a complete opposite relations. So how to attract this LPs? That's one of the great challenges right now. And secondly, the startup industry is all about disruptions, gathering and dismantling. And it's also about how to select or how to identify good startups from bad ones. So it's all about choice. And third one is exit. So the ultimate objective of all the investments are about exits and good returns. So the first method is to go public, and second one is M&A. And both, unfortunately, are in a really downturn trend. And if you look at the U.S. market with M&A and IPO, IPO is more preferred methods for the exit. But in Korea, sometimes this trend is reversed. So, well, in the U.S., M&A is more preferred to the IPO, but in Korea, IPO is more preferred to the M&A. So I'd like to make a proposal to the policymaker for the IPO. So all the governments find themselves in a dilemma. Well, there's tons of money and they should have gone on a stricter policy, but they're also in a position to make more money available in the market. So they're in a dilemma situation. So we're in a tight economies scheme, but the government has to be more active in helping the startups earn more profits, for example, by giving a policy support and by forming a secondary fund for the venture capitals to have more flexibility. And liquidity. So what that is the proposal I'd like to make to the government.
Once again, I'm coming at the end, so a lot of things have been said, but I want to take like a different approach. When it comes to what we are talking about, which is like this innovation economy, when you look at it, it's very young. It's 10 years. So during the last 10 years, all of us in Europe, Asia, United States, have been trying to solve or to address this economy with different standards. For example, you were talking about IPOs and M&A, and the difference between Asia and the US. So it's not standardized yet. It's still young. But it's a very interesting period now. We are coming at the end of a cycle. And during the last 10 years, since the crisis in 2008 or 2009 till now, it's like more than 10 years during which we have been like convincing people around you that this economy will be bringing future. So time has come now that everybody has to, show exactly the results and the facts. Startups have been promising things to investors, and investors have been promising things to LPs. So now everybody has to say the truth, look at the figures, do their math, and come back to maybe a new cycle that will be coming in the next years. I don't know when, maybe 1-2 years. Still, we are doing checks for companies. We're still deploying our money. But the due diligences are different, and we are looking at people who are targeting specific markets with different sizes of markets, because as we always say, we are not looking for good startups. We are looking for good returns, actually, which is make a big difference. So time has come to look at this, and maybe we are crossing, maybe this innovation economy is crossing something like a teenage crisis, and before becoming an adult.
Thank you, everybody. I think we are in the middle of a time of changes because every crisis gave us some investment behavior changes. So now we are expecting what will be, what is going on, what will happen for the next few years. So it's really exciting. And the next topic is still, we may have some prospective field or industry, even though we have a crisis. So what will be those ones for Asian VCs? Well, Raouti, yeah, you can.
We start by me, yeah, first time. What we are doing at the moment, we're focusing on energy, cybersecurity. We also have a deep look at AI, but we try to make it as what kind of AI to solve what kind of problems and what are the sizes of the problems that AI is solving. A lot of things in health tech and medcare and medtech technology. And I would say something about defense and space industry is something that we are looking at the moment. And for sure, we still continue in everything related to agri-tech and this kind of things that will be able to sustain the population globally. Web3 and fintech and everything like this, we have been stepping back. Just want to look what's going on because a lot of promises have been done, but we have to now, look at what's going, what kind of returns we can have with this.
Thank you. Mr. Lee, would you please?
So actually there are similar answers to the prospective field or industry. So under the same context, so looking at the statistics taught me that bio and logistics services are areas where 70% of investment is gravitated toward. And previous speaker mentioned that the defense and the space industry are the most prospective field and industry. But one thing that I want to put much emphasis on is that actually the consumers' behaviors change and the contactless industry is now emerging, and we need to put priority when it comes to make investment in this sector. And so contactless industries are now enjoying higher level of growth. Then what kind of companies would look like in this emerging platform and emerging society? And also every VC needs to pay attention to the government policy direction, and they will decide their investment direction depending on the government direction, right? So Korea has a DNA data network and AI for short, and also contactless industry, remote medicine are designated as one of the strategic industries to be nurtured at a government level. And this might be prospective field.
Yeah.
네.
It could be quite varies because the strategies is quite different from GPs to GPs. But from my point of view, in a summary, I can summarize some patterns of those potential startups or enterprises. I think first of all, you need to tap into a market with a sizable addressable market. So it need to be quite large, like the potential market you are about to penetrate to. And from this product perspective, it needs to be your real addressable market, which means your product or solution could solve the real and deep and some very solid pinpoint of the potential customers. I think this is the first point. And secondly, I think you need to provide a very solid core value to the industry, which means you either have an innovative technology or you have a disruptive solutions which can improve the customer's experience significantly. So which means you can generate profound value for the potential customers and the entire industry chain. So yeah, I think basically these are the two patterns that with the fields that we are looking for. And yeah, to name someone fields that we CICC Center really focus on, I think we like from two aspects. First is the technology side. For technology, we're looking mainly looking into robotics and electric vehicle supply chains. Yeah, these two sectors. And the other field is from consumer side. So for consumer, we're looking with sectors like with a relatively long and complicated supply chain. So there will be a lot of like efficiency improvement demand, like in the sector, such as clothing and textile, and like housing decoration, etc. And I think another field we are also like focusing on is like the efficiency improvement solutions among like some distribution sectors.
Yeah, for us, we specifically look at companies within the Southeast Asian context, which also means for us that, as an example, companies in the Philippines wouldn't necessarily focus on deep tech, but they would focus on specific problems within the Philippines or specific problems within Indonesia. So we kind of remain focused on founders that are building businesses for these ecosystems. I do think what is interesting, there's definitely some overlap with the speakers. What we like, we call them kind of the picks and shovels for Southeast Asia. So if you look at Indonesia and the Philippines, for example, you know, a lot of islands, supply chain and logistics is very, very difficult in these markets. So we're looking at applications and companies that are building logistics services for specifically difficult, non-dense environments. When it comes to fintech, we look more at financial inclusion. How do you make sure that this large demographic that has more and more disposable income, but it's not as much as a mature market, but it is growing fast. How do you make sure that they are also able to use financial solutions that we're used to in mature markets? So our focus kind of remains on these picks and shovels for these specific markets. What is interesting now, and it's a big debate within Southeast Asia, is around carbon offsetting. I think a lot of countries have now more focusing on climate, and there is interest for small and medium businesses. How do we handle carbon offsetting? I think the offsetting itself, there's sort of enough available, but when you look at the accounting for carbon offsetting, that's kind of a big sort of a big white space within Southeast Asia. So we look at companies that are building in that space as well.
Well, thank you, gentlemen. Well, whether it is rainy or snowy, we got to get through. That's the fact. So from now on, we may discuss how can startups overcome this crisis. So, Raouti, would you please?
Yeah, I don't think there is any specific things to do differently. I think it's the same game as it was before. And my colleague from China said it before. What are the value proposition that you are bringing to a market, and what is the size of this market? Is it big enough to matter, and is it like making some promising, profits and return for investors, but also solving real problems for customers? So, according to me, one of the things that startups should follow during the next years to overcome this crisis is maybe to focus more and more and more and more on the market and on the customers. Because, and we all know this, during the 2, 3, 4 first years of a startup, most of the time is consumed to fundraise and to raise money. And sometimes they're not focusing enough on their market and on their product. So maybe it's time for them to focus more on the market and to make sure that they are addressing the market correctly with the right products.
Thank you. Mr. Lee, please.
Yes, how to overcome the crisis facing startups. I'd like to have two approaches. The first is from the perspective of fundraising. Well, with the high interest rates, the burden is increasing, especially with the repayment. So how to overcome crisis financially? So that is one big concern for any startup. So they either have to reduce the cost or increase the productivity. And this is all the more reason for you to focus more on R&D investment and product development. You should never turn your back to the development of product and R&D activities. And if inflation increases, the real income of consumers will decrease and the purchasing power will decrease too. So whether it's B2C or B2B, their marketability or their sales revenue might be impacted too. So you have to coordinate the target, you have to adjust your target, and you have to work for the consumers to increase their loyalty to the company and products.
There is another thing also I forgot to say, but companies should also, to overcome this crisis, which is like trying to raise money, they should be more relaxed on the valuations also, because it's one of the key issue and the key problem that they're facing today. I've been talking to many companies last years, and even a company that had nothing is coming with a valuation of 4, 5, 6 million. So I think it's time for the companies and the startups to be more relaxed on the valuations too.
Well, if nobody say that, I want to add it, actually. Got it. Sean, please.
Okay. Yeah, I think I have 3 points to recommend for startups to overcome this crisis, even though we don't know how long it's going to last. I think first of all is to make better choices, to make the right choices and do the right thing. In China, current days, we have a saying that is your choosing is much more important than your effort making. So I think you need to define the right and solid strategy, and to make sure that your product or your solution business model could make profound value to your customers, instead of you just sold some small pinpoints. Yeah. So I think a solid and profound strategy is very important. And even though we are undergone a crisis right now, so there are still lots of structural opportunities, and there are sectors that's with anti-cyclical patterns. So I think we just make sure your choice and your strategy could meet the future trends, and so you can pass through this stage. And secondly is the don't expand too aggressively. You need to build up a solid capability before you expand too aggressively. It's just as mentioned, currently it's very hard for the fundraising environment. So you need to keep an eye on your cash flow. Don't burn too fast. Make sure your capability is quite solid before you go a massive expansion plan. And thirdly, I think is you choose the right partners to cooperate with. This partner including your clients, your partners of your corporation, and as well as your potential investors. Make sure you choose someone share the same value and could contribute complementary resources or know-how knowledges to you. So make sure you have a steep learning curve.
Yeah, I couldn't agree more. I think maybe the one thing to add as a layer on top is just being capital efficient is just important. The moment you are putting money into expansion, think about the ROI. why are we doing this expansion? Why are we doing this now? Does it make sense from a capital efficient standpoint? Aren't we putting too much money into one specific expansion, whether it's geography, product, team, without getting the return for it? Capital has become more expensive. I don't think that will come down anytime soon. So I think from a founder's perspective, it is very, very helpful to look at your capital and your runway as efficient as possible.
Thank you. Well, I'm also a venture capitalist. One of my company, I invested in a lot of companies. One of my companies told me he wanted to raise money with the 30% discount of last year's price. I told him, you are the man, go for it. Actually, he did raise a lot of money with the 25% discount. I always say to my colleagues, the stronger is not the winner. The winner or the survivor is the stronger. We gotta survive. Don't talk about the price. Don't talk about any other ones. Survive first, maintain, and get the point. So, Raouti, that's a really good point. Evaluation is should be flexible. So now on, we may talk about the last one, very last one, almost finished. We discussed a lot of things, but is there any other unexpected issues for VC or startup? Any other? Michael, would you please?
I think to my earlier point, we shouldn't expect that we've seen the bottom yet. There still might be some surprises coming in the next quarters. Again, with larger funds coming out with their financial statements earlier next year, we are going to see the numbers, and we are then going to see how big the discounts have been, how big the down rounds have been, how valuations is tracking. I think that will bring another kind of a shockwave through the industry, which might be good. There might be another correction. So don't be surprised that we haven't hit the bottom yet. Just be well prepared. If you need to raise on a discount, then raise on a discount. If it extends your runway, if it helps the business, just do it. But yeah, I foresee that we haven't seen the bottom yet, so I do expect a little bit more pain for all of us.
Sean?
Yeah, as I mentioned earlier, I think the most unexpected issue for the Asia VCs or startups is that we don't know how far the current global dynamics, both economically and politically, how far it will go, and actually where we are heading. And actually we are currently, I think we're just in the middle of some chaos. It's not really the crisis yet. It's just some regional problems. And I think the most extreme case would be it would be like a global corporate earnings shrinking, and it will be significantly adversely affected. And while the liquidity market is exhausted, so which means most of the companies, especially for startups, are facing surviving problems. So at that case, you need to I think we need to be very well prepared to pass through the extreme cases. So I think from my point of view, one of the recommendations could be we need to keep a close eye of the global micro trends, as well as the geopolitical trends, and make sure we are very well prepared to pass through some extreme black swan events.
지난 3년 동안
And last 3 years, every country is mapping out quantitative easing and expecting inflation and liquidity concerns. I don't think those issues are unexpected. Many economists expect these issues seeing the quantitative easing policies. But as a player in VC ecosystem, we fail to be 100% prepared for these issues. But unexpected issues on the supply chain are the increase in prices in raw materials. But of course, there are multitude of events transpiring. So the problem here is that how wise we are able to adapt to this trend, I think.
You know, I would like to share something with you because unexpected things are by definition unexpected. So nobody was expecting the pandemic. Few people were expecting this geopolitical crisis with the war between Ukraine and Russia. Few people were expecting, even we knew about it, all these global warming problems that we are facing at the moment. So I think this is the 3 points that could be impactful for the companies, for the startups in the next future. If, for example, we have a new pandemic, if, for example, we have a biggest conflict coming, and coming after the Ukraine and the Russian one, or if we have like, global warming phenomenon that will create chaos on the planet. But even with this, and when I look at 2021, after pandemic, year for the investment scene, it was a mess. Everybody was spending money, investing money with high valuation of the company, so it was like crazy. So I don't know if this kind of events will have an impact on the startups, because when we look at what happened in 2021, what will be coming after this chaos, we don't know. But in the same time, I want to be optimistic and positive. When you look at the companies that were born in 2009, and when you see where are these companies now and how they have been doing success, we all know that best startups were always born during crisis and tough times. So I'm not wishing for unexpected things to happen or bad things to happen, but in the meantime, it's always the best context for startups, for good startups to born and raise.
Thank you, everybody. Well, I'm an investor, but unfortunately or fortunately, I deliver lecture twice a week. Wow, 8 times per month. Sometimes I'm confused whether I'm an investor or a lecturer. Every lecture, I said, do you feel cold? Winter even hasn't come yet. I totally agree, we are not at the bottom yet. Next year, it'll be much colder. But thing is, mankind every time overcome. Somebody will die, unfortunately. Somebody can be a big superstar. A lot of things will change. Wise King Solomon said, this shall pass away too. So we will overcome. Thank you, everybody. Thank you.
Thank you very much for all the moderator and panelists, and we will conclude session 2. And we have listened to a lot of things, and my special thanks go to CEO Pe and other panelists for moderating today's session and for participating in this panel discussion. Thank you very much. Please give them a big round of applause. Now, please get back to your seats. Thank you for your understanding. And without further ado, we'll move on to the session 3. So the new wave of innovation created by Asian unicorns is the theme. So please be seated while we make an arrangement on the stage. So once again, I would like to provide you with some tips. We would like to provide a simultaneous interpretation, and this session's default language is English. So please find out the receivers placed on your table, and please tune to channel 1 for Korean and channel 2 for English. So if you do need simultaneous interpretation service, please find receiver and tune to appropriate channel for preferred language. So please be patient, and we'll commence shortly and momentarily.
저희 세 번째
And the third session will start at 3 p.m. sharp. So please get back to this venue at 3 p.m. sharp.